In the world of trading, even the most experienced traders end up having problems when the market increases its volatility, leading even to the desperation of many traders. And of course, that desperation, that anxiety, ends up causing them to make mistakes. That's why in today's video, we are going to show you step-by-step a strategy with very simple indicators that will help you avoid these kinds of situations in traditional markets, forex, commodities, and even cryptocurrencies, the most volatile ecosystem of all. Don't miss any details because this is a strategy you can apply yourselves to maximize your profits. And yes, as you can see, we have created a new Telegram community, completely free, where we will be posting all the updates about what's happening in the financial markets, as well as trading operations, analysis, and much more valuable content. You can find the link directly in the description. Well, as I was saying, these indicators and this strategy are perfect for volatile moments like the ones we're living through. For example, in the crypto world, what better way to test them than in a real market and with the Bitcoin USDT pair? We're going to start with a 1-hour time frame, but you're going to be amazed because these types of strategies are especially applied in lower time frames, such as 15 minutes to perform scalping or intraday operations. The first thing we need to do is look for the TrendFlex oscillator by Dr. John Ehlers. You can also see that it's been highly rated by the community. We simply click on it and it will appear something like this. As you can see, it's quite a colorful indicator, and we're going to make a couple of changes in the style section. The upper line, which indicates an overbought zone, will change from 1 to 2, and we'll do the same with the lower green band from 1 to 2. You can leave the rest to your liking and keep the numerical inputs as default. We click accept, and here we have our indicator, which works like most oscillators. Every time the waves exceed that red line we've marked, in this case at 2, the price will be in an overbought zone, meaning the price will tend to reverse its trend, in this case from bullish to bearish. Now, just by placing it, we can see that in the last few days on the chart, the oscillator waves have surpassed both the overbought and oversold zones several times. If you look closely after this happens and we return to the usual range, what happens right when the wave changes from pink to blue? Exactly at this point. Well, yes, as you can see, the price drops, and we could have already secured a good trade. A little further along, we see a similar situation. The wave drops to the oversold zone and rises again, changing exactly at this point from red to pink. In fact, we could adjust it so that the entry candle would be precisely this one, since we need it to close right at that point. And here again, we would place our trade, in this case to the upside. We would already have a direct benefit of a 2.1 ratio, and as you can see, we could even let part of our trade run, reaching almost a 10% profit in spot. Still, if we are conservative, we would take profits at this point, and I recommend that you always aim for a 1.5.1 ratio for your first take profit. We take some profits, and then we can let the rest of the trade run. A bit further on, we have the same type of movement again. We see how the blue wave turns upward into pink, and what do? We could perfectly take another trade with a 1.5.1 ratio. I always recommend adjusting it to the previous structural lows, not these down here, but these here, because we are in the crypto market and we always need to secure profits and manage our stop losses optimally. What do we have up here? Exactly the same, but in reverse. Right at this candle here, we place our stop loss and take our short. If we lower the time frame a bit, we see that just at that moment, we had news that it seemed like the Bitcoin ETF had been approved, but it turned out to be fake news, so the price dropped again in the direction it should have taken from the beginning. That's why, in this case, we lost the trade. But of course, that's something we must always keep in mind. No indicator or fixed strategy will give us a 100% win rate. But as you can see, it's very clear that if we hadn't had that news, the trend would have continued downward. But this is far from everything. You can already see that the indicator alone, with this setup and strategy, works perfectly on a 1-hour time frame. But how can we filter these trades even more? And above all, do it with this level of precision, in this case, on a 15-minute time frame? Well, let's add one of the community's favorite indicators, the Average Directional Index, or ADX. The first thing I'll do is change its color to yellow to differentiate it a bit from the other indicator. In the inputs section, We leave it as it comes by default, and now we're going to place a few horizontal lines. The first one will be at exactly 50 points. You can go here to the coordinates section and directly mark 50, so you're exactly at those 50 points. We'll also make it a bit thicker and then mark 2 more, also in red, both at 45 and 55 points, and we'll end up with something like this. I'm even going to make the central line a bit thicker so we can differentiate it perfectly. All right, now I'm going to give you the trading guidelines we need to consider when making an entry. First, we need to wait for the ADX to contact that zone between 45 and 55 points. For example, I'd set an alert directly at the 50-point zone so that it alerts you when this happens, and you don't have to be constantly watching the chart. In other words, to automate these entries a bit. When this happens, for example in this area, what do we need to look for in the upper indicator, the TrendFlex? First, if we come from a zone where the wave has passed through oversold or overbought, for instance, in this specific area, and right when the ADX touches that zone, that point. If we see that the blue wave is starting to rise towards the range, right at this point, we know it's a good entry zone to place our trade. We set our stop loss at the previous structural low and, as I mentioned, aim for a 1.5.1 operational ratio. Again, at this first take profit, you can take most of your profits and then, if you want, try to increase the profit with the rest of the position reaching the full trend. You would simply play with the different structural lows. As I always say, I recommend being very conservative, especially if you're trading. We're going to have a high win rate. Again, we see in this area how the ADX reaches that space between 45 and 55. What do we see here? We have another confirmation from this divergence between the price and the TrendFlex. What happens? We see that the ADX seems like it won't reach those 50 points, but remains in that zone between 45 and 50. And well, supported by this divergence and seeing how this second pink wave starts to fall again, we can decide that it's a good entry zone. Once again, we set our stop loss and take those quick profits. We keep moving forward until we find a similar setup. In this specific area of the ADX, we see that it doesn't manage to reach those 45 points, but again, we have a divergence between the TrendFlex coming from that oversold zone. It's important that you always take these trades when the TrendFlex wave also reaches an oversold or overbought zone. If we see that the ADX aligns but the wave hasn't crossed one of those extreme zones, we shouldn't take the trade. In this case, it does touch those zones. The ADX doesn't quite hit, but it's still very close to those 45 points. But of course, seeing the divergence of the oscillator with the price, we can look for an entry because we have high chances that the price will rise. And as you can see, we can also interpret that the entry point has little risk since the stop loss is very close. Obviously, you can combine all this with your basic trading knowledge. In this same trend, what do we see? The waves of the TrendFlex are rising as the trend continues, but what happens here? The ADX contacts this zone, even breaking through the 50-point level, while the pink wave starts to fall. We place our trade exactly at this point, follow our guidelines, and again, we take profits. The first one always with a 1.5.1 ratio. And as you can see, we could even have taken these without the price going back up. We keep advancing, and almost at the live price, we have another similar zone. The ADX is about to touch those 45 points. The blue wave is coming from touching that extreme oversold zone and returning to its normal range. So without a doubt, we have another good entry point. Stop loss below the previous lows, and again, we exit with profit without too much difficulty just a few hours later. As you can see, by properly interpreting the information from these indicators, we can achieve some incredible win rates just by looking for those perfect technical entry points. So as always, I encourage you to try it yourselves and comment below on how it's going for you. And below in the description, you have the direct link to our website, Dalgo Traders, where you can get the best indicators on the market for trading in Forex, cryptocurrencies, stocks, or any type of asset. Supported by artificial intelligence, these indicators are capable of adapting to market information and identifying the perfect entries for your trades on a daily basis. If you're not yet as profitable as you'd like to be, switch to Dalgo Traders indicators and you'll be able to achieve it while trading any type of asset. Additionally, in our community, You'll be accompanied not only by our mentors and professional traders, but also by the more than 500 people who are already taking advantage of this opportunity.